Hello everyone and welcome back to SASAL Inc. YouTube channel. I am Hannah and today we're going through a new NYSE company. So this week let me introduce you to the JPMorgan Chase Co company. So to begin, let's go through the overview and the background. So JPMorgan Chase Co is one of the world's largest and most influential financial institutions, with its headquarters in New York City. The company was created in 2000 through the merger of j.p.morgan Co and Chase Manhattan Corporation, combining JPMorgan's strength in investment banking with Chase Manhattan's consumer and commercial banking expertise. Operating in over 100 countries, JPMorgan Chase has a strong presence in major financial centers such as London, Tokyo, as well as Hong Kong. Jamie Dimon, who has served as chairman and CEO since 2005, is a prominent figure in the global financial sector and has led the company through various economic cycles. JPMorgan Chase services are divided into several key areas. Consumer and community banking, which offers a range of products for individual and small businesses, including checking and saving accounts, mortgage, auto loans, as well as credit cards. The corporate and investment bank provides comprehensive investment banking services, including advisory, underwriting, trading, catering to large corporations, governments, as well as institutions. And the asset and wealth management delivers investment management and financial planning services to both individual and institutional clients, helping them grow and manage their wealth. Despite its significant size and influence, JPMorgan Chase has faced various challenges, including legal and regulatory issues, particularly in the wake of the 2008 financial crisis. Nevertheless, the company is committed to giving back through its philanthropic initiatives, with the JPMorgan Chase Foundation focusing on community development, education, and economic inclusion. JPMorgan Chase is listed on the New York Stock Exchange, which is why they have their annual report 2023 that we are going through right now. They are listed under the ticker symbol JPM, reflecting its prominent role in the global financial landscape. Now onto JPMorgan Chase & Co.'s business and strategy. JPMorgan Chase & Co. operates with a multifaceted business model designated to leverage its extensive global reach and comprehensive financial services. The company is organized into several key divisions, each focusing on different aspects of banking and financial services. The Consumer and Community Banking (CCB) divisions is dedicated to retail banking, providing a broad array of products and services including checking and saving accounts, mortgage, auto loan, and credit cards. This segment serves both individual customers and small businesses, addressing their everyday financial needs and helping them manage their personal finances. In contrast, the Corporate and Investment Bank that we mentioned earlier, called CIB, focuses on investment banking services. This division offers once more advisory services for mergers and acquisitions, M&A, underwriting of debt and equity, and trading of securities and derivatives. It caters to larger corporations, institutional clients, and government entities, facilitating complex financial transactions and market activities that are crucial for large-scale economic operations. The Asset and Wealth Management (AWM) division provides investment management and financial planning services to a diverse client range, including individual investors, families, as well as institutional clients. This segment aims to help clients grow and manage their wealth through tailored investment strategies and comprehensive financial planning. Additionally, The commerce banking segment supports mid-sized and larger businesses with specialized banking services. This includes commercial lending, treasury management, as well as deposit product designed to meet the financial needs of growing businesses and enhance their operational efficiency. JPMorgan Chase generates revenue through several key streams. Net interest income is a major component arising from the difference between the interest earned on loans and investments and the interest paid on deposit and borrowings. This revenue is essential for the bank's profitability and is influenced by fluctuation in interest rates and the company's lending and investment activities. The company also earns significant revenue from fee-based services, which include investment banking fees, asset management fees, and transaction fees. These fees are associated with various activities such as M&A advisory, capital raising, and financial advisory services. Additionally, trading and investment income is derived from the bank's trading activities and proprietary investments, reflecting its involvement in financial markets and investment opportunities. JPMorgan Chase strategic approach emphasizes global expansion and diversification. The company operates in over 100 countries with a substantial presence in key financial centers like New York, London, Tokyo, Hong Kong. This extensive international footprint allows JPMorgan Chase to serve clients across diverse markets, helping to mitigate risks and capture growth opportunities in different regions. By offering a broad range of financial products and services, the company is able to cross-sell solutions across its various divisions, enhancing its ability to meet diverse clients' needs and capitalize on opportunity in various market segments. The company invests significantly in technological advancements to improve efficiency and drive innovation. This includes developments in digital banking, cybersecurity, and data analytics aimed at enhancing the customer's experience and optimizing operational processes. The emphasis on digital transformation is evident in the development of digital channel tools, such as mobile banking apps and online platforms, which provide clients with convenient, secure, accessible banking experiences. Risk management and compliance are fundamental to JPMorgan Chase operation. The company maintains a robust risk management framework, address various types of risks, including credit, market, operational, as well as regulatory risks. This comprehensive approach to risk management supports the company's stability and long-term success, ensuring that it can navigate challenges and maintain resilience in a dynamic financial environment. Now that we've gone through its strategy and the way it operates, let's dive into the risks that come along with this. JPMorgan Chase Co encounters several significant risks in its operations. Credit risk is a major concern, arising from the possibility that borrowers or counterparties may default on their financial obligations. To manage this risk, the company employs rigorous credit assessment procedures and diversifies its loan portfolio. But significant defaults or deteriorations in credit quantity can still pose challenges. Market risk involves potential losses due to fluctuation in market prices or rates, such as interest rates, foreign exchange rates, and commodity prices. The bank's exposure to market risk is heightened through its trading activities and investments. JPMorgan Chase uses risk management tools like value-at-risk, VAR, models, and stress testing to mitigate these risks. Operational risk stems from potential failures or disruption in international processes, systems, or human factors. This This includes technology failures, fraud, or errors in business operations. The bank invests heavily in technology and cybersecurity to address operational risks, but system outage or security breaches can still pose significant challenges. Regulatory and compliance risk arises from the need to adhere to a complex and ever-changing set of regulations and law. Non-compliance or changes in regulatory requirements can lead to legal penalties, fines, and reputational damages. JPMorgan Chase actively manages this risk by implementing robust compliance programs and closely monitoring regulatory changes. Liquidity risk involves the potential difficulty of obtaining funds to meet financial obligations or funding needs without significantly impacting market conditions. The bank manages liquidity risk through effective cash flow management and maintaining a diverse funding base, although market disruptions or unexpected funding needs can still create challenges. Reputational risk refers to the potential damage to the company's reputation due to negative publicity or public perception. Issues such as financial misconduct or poor customer service can harm the bank's brand and client trust. JPMorgan Chase mitigates reputational risks through strong governance and ethical business practices. Strategic risk involves potential losses from adverse business decisions, ineffective strategy implementations, or failure to adapt to market changes. The company addresses strategic risk by continually evaluating and adjusting its business strategy and monitoring competitive and economic trends. Systemic risk refers to the risk that the failure of a major financial institution could trigger a broader financial crisis affecting the entire financial system. As a systemically important institution, JPMorgan Chase risk management practices aim to minimize systemic risk, though significant financial instability remains a potential threat. Interest rate risk is a key concern for JPMorgan Chase, as fluctuation in interest rates can impact the bank's net interest income and the value of its assets and liabilities. Changes in interest rates can affect loan and deposit pricing, investment values, and overall profitability. Credit spread risk involves the risk of changes in the credit spreads and securities, which can impact the bank's investment portfolio and trading activities. As credit spreads widen or narrow, the value of the bank's investments can be adversely affected. Counterparty risk arises from the possibility that a counterparty to a financial contract may default on their obligations. This risk is particularly relevant in trading in derivatives markets, where the bank engages in transactions with various counterparties. Cybersecurity risk is a growing concern for JPMorgan Chase, given the increasing sophistication of cyber attacks and the critical importance of protecting sensitive financial data. The bank faces risks from potential breaches, data thieves, and disruption to digital services. Political and economical risks include the potential impact of political events such as elections, regulatory changes, and geopolitical tensions on the bank's operations and financial stability. Economic instability or policy shifts in key markets can also affect the bank's performance. Environment, social, and governance (ESG) risk involves the potential financial impact of environment and social factors, as well as government issues. For instance, regulatory changes related to environmental sustainability or social responsibility can affect the bank's operations and reputation. Model risk arises from the potential for errors or inaccuracies in the financial models used for risk management, pricing, and decision-making. Dependence on complex models means that incorrect assumptions or data inputs can lead to significant financial losses. Legal risk pertains to potential financial losses arising from legal actions, disputes, or litigation. JPMorgan Chase may face lawsuit or legal claims related to its business practices, which can result in financial penalties and reputational damage. Operational resilience risk includes risk related to the bank's ability to maintain operations during and after disruption, such as natural disaster or major technological failures. Ensuring business continuity and recovery plans are in place is critical to managing this risk. Climate risk involves potential financial impacts from climate change and related regulatory measures. Reinvestment risk is the risk that the bank will also have to reinvest funds at lower interest rates than previously earned, affecting its overall income. This can occur when maturing investments or loans need to be reinvested in a low interest rate environment. Economic downturn risk involves the potential negative impact on the bank's performance during economic recessions or slowdowns. Economic downturns can lead to increased credit losses, reduced consumer spending, and lower investment returns. Lastly, I would like to talk a bit about money-wise. In 2023, the total net revenue was of $158.1 billion, which is up by 23% from the previous year. If we compare 2023 with 2022, the net income of 2023 was of $14.1 billion, which is down by 5% from 2022. Regarding the net revenue, it was in 2023 of $48.8 billion, which is up by 1% from the previous year. And lastly, the banking revenue was in 2023 of $16.5 billion, up by 7% from 2022. This was it for this week's video. I hope you were able to learn more about this NYSE listed company called the JPMorgan Chase Co. It was Hannah. Thank you for listening to me. I will find you in another video very soon. Please make sure to subscribe, like this content, interact with our channel. You are watching SASAL Inc. YouTube channel. Thank you for sticking along. See you very soon. Bye bye.